The stock market struggling to hold on to gains amid fears over tariff risks. However, our next guest highlighting an underappreciated winner of this geopolitical year. VettaFi senior research analyst Zeno Mercer joins us now to discuss. Zeno, great to see you on set.
Great to be here.
So let me ask you, Zeno, so we were just talking to Brent Till there. I want to stick with, listen, Trump 2.0, tariffs are front and center. I want your line of sight about what that means for one sector that you know very well, Zeno, in particular, which is robotics, right? How should investors be thinking through puts and takes there?
Yeah, I think it's good to look kind of back at the last 5 years. We've seen the global robotics market was in a contraction or flat. We're not seeing growth. We saw China, which is 70% of industrial robots. That's starting to decline. We'll see how everything shakes out this year. So we saw end markets tough. We saw U.S. construction manufacturing at a record high of about a 200 billion run rate. So we're seeing all this capacity built up. And these are actually from Biden policies with the CHIPS Act, Inflation Reduction Act. So we were already leading with a bunch of carrots there. Now with the latest, we're kind of turning carrots into sticks and whacking people that were already investing. So like, speak softly, carry a big stick. Now we're smacking around with a carrot. A bunch of companies that were already investing a lot of money into CapEx and stuff in the US. Like you have a lot of Japanese companies that are going to be front and center with global reshoring, global nearshoring, and like an industrial rebasing of localized infrastructure build out. They've been hit really hard year to date, both from a tariff front and also, an expectations of investment front, which is ironically, I'm sure, kind of the opposite intent of where we're heading.
Right, and even some of those that have done the reshoring, if they're importing aluminum or steel to build, to make the robotics components, they're going to be tariffed on those items.
Exactly, which is why it probably won't. I don't see a world where that actually sticks, because if you actually do want to build stuff in America, you have to get the inputs down. I mean, I saw today that lumber was bumped up, so now construction's going to go down. Like it's just economics and physics. But again, from the longer term picture, this kind of reminds me of where NVIDIA was at in 2022, where we saw PC and gaming going down, but like the bigger picture was like there's this big wave coming. And right now, if we kind of think back what's happened this year, we had DeepSeek, we had Stargate, we had NVIDIA at GTC showing a bunch of new robotics modalities, simulations, and humanoids, right? So if you think of like where are we heading, if we kind of ignore like the fray for a second, like the bigger macro picture is that we're looking at the end of 2 years of really tough robotics market, but we're looking at the dawn of a new super cycle. And it's not just a trend, it's not a theme. This is where, if we're gonna reshore anything in America, probably gonna be more high-tech stuff. It's gonna be very advanced manufacturing. We're not gonna be doing shirts, socks, things like that here.
So when Trump talks about this broad policy goals, making more stuff here, right? Produce more here. As you think about what that actually looks like 5 years, 10 years and beyond, you see, okay, we're making more stuff here, but it'll be more stuff made by robots?
Yeah, probably.
Yeah.
And then how do you invest in that?
Yeah, well, I mean, you've got obviously like your picks and shovels. You've got US robotics companies, you've got companies in the system integrator. So how do you plan and build out both up front and ongoing? So companies like Rockwell, ABB, and Siemens. You have Japanese players that have been at the forefront of manufacturing, like Fanuc, that have already invested a lot in the U.S. Like this has already been their biggest push area, like to get less dependence on China. And then even companies like Foxconn, right? This is Apple's biggest partner. There's two things happening with them that's interesting. They're doubling production of iPhone capacity in India. That was announced and planned recently, but iPhone's not even going to be their biggest area. They've got AI servers, so they're partnered with NVIDIA. They're getting into EVs. They're geo-diversifying. So they're also, if you think of relative valuations, the U.S. market has been pretty expensive lately on a relative basis. Foxconn has been trading at under 9, or right now they're under 9 times forward EV or PE and 0.3 times forward EV sales. So you've got not only opportunities here, but you're looking at historically relatively low and pretty much absolutely low valuations.
So always good to see you, especially on set. Thanks for coming in.
Thank you.